Hey everyone, welcome to my YouTube channel Trading Toolux. So in this video I will be explaining how to predict the direction of the Nifty, Bank Nifty and this 12 heavyweight stocks based on the Smart OI tracker. So before I explain all the strategies, let me tell you all the components that is present in this tool, also how it works, so you can use this tool with the confidence. So let's get started. If you open the Smart OI tracker, you will see all these lines and bubbles. So this yellow line is the global index that is created based on all this global index. I have given more weightage to the USA market, and this purple line is the India VIX, and this white color lines are the price of Nifty and Bank Nifty, and all these prices are updated every 15 seconds. And regarding this bubble, I will explain in detail now. First, let me explain how this red color circle is created. Suppose if the Nifty spot price is around 13,400 and time is around 10 a.m. I check how many lots of call option has been sold for all the strike prices. That is one at the money, one in the money and 5 OTM. Similarly, I do for the put option as well. I find out how many lots of put option has been sold in all the strike prices. That is one at the money put option, one in the money put option and 5 OTM put option. So the circle size is based on my custom algorithm. I give more weightage to the ATM in the money and nearby OTM. Also the circle size will be very small or no circle at all if there is no call option writing at all at particular time. That is, if 10 a.m. If no one sold any call option at all, there won't be any circle at all in the Smart OI tracker. Similarly, it happens for the put option as well. Same logic for put option as well, but it will be in the green color. Now suppose at around 11 a.m. if the spot price is changed to 13,600, I use the same concept, but I shift the strike price and check for the fresh call option writing or fresh put option writing. So you can see now 13,600 is the ATM and one in the money and 5 OTM. Similarly, I do the same for the put option as well. So this is how the red color circle and the green circles are created. Now let us look into the other parts. And one more thing, the reason why we are following option sellers is because most of them are big players. Also due to the recent margin rule, to sell one lot of Nifty or Bank Nifty, we require at least 40,000 or 50,000. Also, since it has unlimited risk, before selling any of the option, they do lots of analysis. So we are just following them. So now let us look into this chart. Right now we saw how this single red color circle and green circle is formed in the Nifty, but we have a lot of other circles. Let us look what are all the circles. So this is Bank Nifty current week, and this one is Nifty heavyweight stock like Reliance, HDFC, and this section is for Bank Nifty heavyweights like HDFC Bank, ICICI Bank. And all the circle you are seeing here is also created on the same principle like I have explained here. For example, in the Reliance, I will be checking 8 call option and creating the red circle, and I will be checking 8 put option and creating the green circle. And this section is for the Nifty and Bank Nifty, next week expiry and next month expiry. And this top and bottom section is the squared off thing. This one I will be explaining in the end. Now let us jump into the strategy. Before that, I have given the circles of the heavyweight also because you can see the weightage that is provided by the NSE. That is basically Nifty moves based on the heavyweight stocks like this, and the Bank Nifty moves based on the heavyweight stocks like this. So it is important to find the direction of this heavyweight stock as well to find the direction of the Nifty and Bank Nifty. That is why I brought everything in the single place. So yeah, now let us jump into the strategies, various strategies that you can use to predict the direction of the Nifty and Bank Nifty. The first strategy is when the price is at the top and there is big red circle, you can sell it. And the second strategy is the opposite of that. When there is big green color circle and the price is at the bottom, you can buy it. So let me show you live example. If you look at the chart, you can see from 10 a.m. there is big red color circles is formed near the Reliance. So let us look into the Reliance chart. Also, our first rule was satisfied, that is the price should be at the top, and when the price is at the top we are getting red color signal. Big red color circle formed at around 10 a.m. From 10 a.m. you can see the price is falling in the Reliance, that is around 25 to 27 points. So this is the first strategy. Let us look into another example as well. If you look at here, there is also lots of big red color circle is formed in the INFI around 230. So you can see lots of red color circle in the INFI. Let us look into the INFI chart. Okay, yeah, here you can see from 1230 the price is also at the top. Our condition is satisfied, the price should be at the top, and the INFI is falling down. INFI fell down around 15 points. So that is because some of the call option sellers know that the price is gonna fall, so it may be any price action as well, but the call option sellers are very active and we are seeing big red color circle here. So we are just selling with strict stop loss of 3 or 4 points. You can get good risk reward using this. So the second point is big green circle should be formed when the price is at the bottom. So oppositely, when the price is at the bottom, if you are seeing if any big green color circle, you can buy it. So that's it. Now let us look into the next strategy. So the next strategy is when there is continuous green color circles, and also if the price is at the top, and when the green color gets stopped, mostly the price will fall down. So this is the example. So the price is at the top, the price rallied up, there is continuous green color circles, and suddenly for few minutes the continuous green circle stopped, and you can see from that moment the prices fell down. So similarly, the another strategy is opposite of that. There is continuous red circle when the price is at the bottom. After that continuous circle, red color circle has stopped for some time, mostly the price will go up. So here is an example. The prices fell down and there is continuous red color circle, and once that red color circle has stopped and the price has shot up. So this is the next strategy. The fifth point is the green color circle created after long time. For this setup there shouldn't be any green color circle for longer time. Here we can see for past 1 or 2 hours there is not much big green color circle, and suddenly the green color circle is being created. That is put option sellers are selling this put option. Also the market is in the downtrend. After the downtrend some people are selling put option heavily. That's why the market is going up. So that is the logic behind that. And again here we can see there is not much green color circle, and suddenly some big green color circles are appearing and there is big market rally. Similarly we can see the pattern here, not much green color circle, suddenly big green color circle, the price is going up. So the opposite of that is sixth strategy. Red color circle has created after a long time. Here we can see there is not much red color circle for around 2 hours. After some red color circle is formed, the market is going down. So yeah, this is fifth and sixth strategy. So the next strategy is based on India VIX. So this purple color line is the India VIX. Most of the time what happens, when the India VIX is going up, our market will be falling down, and when the India VIX is coming down, our market will be going up. So you can see the live example here. Here the India VIX is increasing and our market is falling, and there is some fall in the India VIX, and we can see that our market is going up. And this India VIX is basically opposite of our market. Just think of that perspective, but India VIX works in some other way. For just understanding I am telling this. So you just trade in the opposite direction of India VIX, but you shouldn't use the India VIX separately. If other setups are appearing along with India VIX, it is high probability setup. So the next setup is global market setup. So basically what happens whenever there is a huge rally in global market, our market also will follow. Here we can see the global is going up, our market is also going up, and when the global is falling down, our market is also falling down. So here is another example. Suddenly there is a big rally in the global market, and our Indian market was also going up. And after the fall in the global market, the price, our market stopped there, consolidated, and again our market also fell down. So this is the 8 different strategies. So now let us look into the different rules that you should follow definitely while following the smart wire tracker. So the rule number 1 is don't be bearish after a fall, wait for consolidation. For example, if Nifty or Bank Nifty has fell down too much, after the fall, if you are getting any red color signal or any bearish signal, please don't take any bearish trade. Wait for some consolidation or retracement. Again, still if you are getting any sell signal, you can enter sell trade. So the rule number 2 is the opposite of rule number 1. For example, if the market is going up too much, and in the top of the market, if you are getting some bullish signal, don't take the trade because that is mostly done by the late entry option sellers. So please avoid that. So after the consolidation, or if there is any small pullback, again if you are getting any bullish signal, you can enter your trade. And third rule is do not look into the first 30 minutes and last 30 minutes of the smart wire tracker, because most of the time the option sellers will be squaring off and there will be some lots of noise and the data won't be proper. So please avoid the first 30 minutes and last 30 minutes. So the next rule is don't look at the global if not in sync with our Indian market. Some days what happens is global market will be moving in some other direction and our Nifty will be moving in some other direction. If you're looking into first 1 hour or 30 minutes, you will be able to know. If you see this day, most of the time when the global is going up, our market is going up, and when the global is falling down, our market is also falling down. So that this day is in proper sync with our market. During these days, you can follow the global, but sometimes it won't be following our market. So during those days, please avoid looking into the global yellow color line. So similarly, fifth rule is don't look at the VIX if not in sync with the price. That is like I explained you that VIX will be going upward and our market will be mostly going downward. And when the VIX is going downward, our market will be going upward. So if that situation is not appearing, if you look at this chart, the VIX is going up and our market is also going up. So the VIX is not in proper sync with the price, like I told. Basically the VIX should be in the opposite direction of the Nifty or Bank Nifty. So this is not happening. So during these days also, do not look into the India VIX. So yeah, that's it guys. Thanks for watching my video. That's it for this tutorial. Please subscribe to my channel for more videos like this. Thank you.